India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Thank God it's Friday. We are starting this last trading session of this week on a bit of a high because global markets are doing very well and there is lots and lots of stuff to talk about. It's a really vibrant screen, not just here in India, but globally as well. This is Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. There couldn't have been a better headline to open the show, Prashant. I completely am with you. Thank God it's Friday. This week feels like it's been like 7 or 8 days, not 5. What about you, Nigel?
7. Much longer, but I love to. Yeah, Prashant just went all out there.
Yeah. We're with you completely, so take it away.
Absolutely. And, the big question here in India, I think at least, is very, very simply put, people have been kind of sort of going on and on about for the last many months now that, large caps is the place to be, tilt your portfolios to large caps. Has that moment finally arrived? That has the large cap rally really begun? I mean, I think that sort of nicely puts the context of the question in a sharp focus. Now, it's early. It's very early. I looked at last 1 week. I looked at the last 1 month, last 3 months. And last 1 week, perhaps, is where it stands out more. So the Nifty is up 3% last 1 week. Mid-cap index is up just under 2%, and the small-cap index is up about 0.6%. You could go one level lower and look at some of the disaggregated sectors, etc., and it'll be more sharper. But this is the kind of headline picture. And it just feels like, just market breadth and other indicators, etc., it does feel like that it's getting narrower and narrower at the top. What is the top of the market cap list is doing better, and that is essentially large caps. Outside of it, there is pressure and there is profit taking, etc. I'll come back to this in a bit. Now, global markets are in a pretty decent place as well, and that is because of 3 things. One is, AI. There's sort of one big theme globally, especially in the US, it's AI. You had Micron earnings there. China, the stimulus, and I'll talk about that. And of course, the big sell-off that we saw in oil prices. Let's start with the beginning, which is Micron. The stock ended 14% higher. They reported numbers, and the read-through is pretty bullish for semiconductors and the entire AI demand story. And I think that is point number 1. Now, question around China is, and with the thing with China, of course, has been that there is they've always tried to do and stimulate the economy through monetary policy, rate cuts and reserve requirement lowered, etc., etc. What happened yesterday was that there was a Politburo meeting, which is the top decision-making committee of the Chinese Communist Party, which was chaired by President Xi. If you look at what was said, there seems to be a more sort of determined effort towards looking at the fiscal side as well. So monetary was coming over the last couple of years, but with little effect. But now I think China is going to look at the fiscal side as well. There is, by the way, talk of sort of putting money directly into the hands of families, a certain amount every month. That is, plain, simple fiscal stimulation. That, I think, is more than anything else what's sort of really excited markets out there. So the question really is this time different, right, for China? Because they've tried many things, but it's not worked. But markets are excited. China ADRs overnight in the US were up between 8 and 11%. Another big indicator, of course, is copper prices, which is back above the 10,000 mark. And this is the first time since July. I'll get to the third big trigger globally, which is oil prices, down about 3%. There was that Financial Times report which said that Saudi Arabia is abandoning its unofficial price target of $100. They want to gain market share. Oil fell 3%. Essentially, the bet is that there'll be more oil out in the market. And the reason why global markets perhaps are excited, we're at the cusp where you want disinflation to allow for central banks to be to allow to cut interest rates, and oil going down. Is disinflation everywhere. That, I think, is the big trigger, apart from, of course, oil-related equities, etc. Now, U.S. equities, they were slightly higher. S&P 0.4, NASDAQ 0.6. European equities were also higher. A lot of China-related plays there. So Eurostoxx 50, which is the largest 50 European companies, 2% up. The index ended about 5,000. Dollar index is again testing lower levels, down about 1/3%. We're back in that support zone. About 100.62 is where we left off, and the support is 100.5 to about 100.8. So just to circle back and finish this up with levels, Nifty yesterday broke above, and I was saying this yesterday, is the market move maturing or is this going to run and rip? And the important test is 26,245. We broke that intraday yesterday and then cooled off a little bit, but we broke that. That is 26,245. So you got to look at upside levels here. So those levels are 26,521. Those are Fibonacci extensions. And then look at 26,835. These are near-term levels more than anything. Support for the Nifty stands at the 40 hourly average, which is moved to 25,870. Similarly for the Nifty Bank as well, which yesterday broke above the previous high, immediate resistance at 54,772, and then the psychological number, which is 55,000. And on the way down, supports come in at 53,792, which is the swing low. I mean, we're in a pretty decent place globally. I mean, here, of course, the worry has been that maybe the market's extended too much too soon, and that is also true. But, sometimes you're in a phase like you find yourself, which is pretty unique, right? It's global markets are excited, and here that final inflection into large cap seems to be finally happening. So there is, I think, enough in the tank for the market to stretch a little higher, especially on the large cap. And GIFT Nifty will come up on your screen, give you a sense of how the open is likely to be about 30 points higher. Surabhi.
Prashant, absolutely. And in the market in the last couple of days, we've had a lot of newer sectors come to the party.
Yeah.
So it's been metals this week. It was autos yesterday, the way those stocks were revved up. And now we have more, positive news from China.
Yeah.
And we have positive news on IT as well. IT has not been one of the best performing sectors, but let's see if that happens. First, China, because, excuse me, those rate cuts that were announced, they're finally kicking in now. The reserve requirement ratio drop of 50 basis points, that comes into effect. Not just that, the 7-day reverse repo rate has also been lowered in China from 1.7% to 1.5%. So the market is really rejoicing this. I mean, it's taking it up, lapping it up in every way possible. Though I must say the numbers, the data, the macros out of China are still extremely weak. And one example will be the number that's come out today. If you look at industrial profits, then in the month of August, they have dipped. I mean, there's a contraction. The dip is about as much as 18%, which is far worse than July. July, they still managed about a 4% growth. But August numbers are really, really poor on industrial profits. Anyway, because of the stimulus, the tactical positioning is changing and it's showing up in prices. Look at what China has done this month. The Shanghai Composite is up nearly 7% this month. The Hong Kong market has been the best performer. Look at the rally, 14% higher this month. And the Nifty is actually not too bad. I mean, given the backdrop, still this 5% up move, given the fact that the attention is coming back to the large cap space. Speaking of large caps, like I said, IT is probably going to be turbocharged as well today. At least the Qs are positive. If you look at Accenture, because what is Accenture saying? The revenue for the quarter gone by, the fourth quarter as they call it, is up 5% in constant currency. Outsourcing, which is what we look at, managed service, because it's more comparable to our large listed IT companies. That number is up 7% in constant currency, YOY. And even the consulting piece, that's returned to growth after, I think, 6 quarters of decline. Accenture's consulting business is back on the growth path. The guidance seems quite good. The market likes it, 3 to 6%. That also includes possible inorganic growth, but 3 to 6% is the range. And they're saying that even margins will improve in the year ahead. So it's an all-round good performance, sounding confident, and let's see if we get some of that rub-off on IT. Then there is Deal Street, which is always buzzing. And in a bit, we'll hear Nimesh talk about this because he alerted us on Pratap Snacks. Remember yesterday, the snack makers, Gopal and Pratap, were up. Pratap closed up 20% on circuit. And now the news is out because we have some marquee names checking into the company. Autumn Investments and Mr. Madhusudan Kela, they are buying almost 47% stake. And then there's an open offer that's going to be triggered at 846. So this definitely is going to be a big stock in focus today. Block deal action, that's pretty much what's been driving it. But we have a lot of top-down positivity as well. And that's been showing up on the Nifty too.
Well, that's right. And it's the start of a new series. So let's tell you about the rollover picture right away. And the rollovers, well, for this series are a little bit higher than what we saw on an average of the last series. And on the Nifty itself, you're seeing long rollovers. The total open interest is much heavier than what we saw at the start of the last series. And on the Nifty Bank, well, a couple of sessions ago, when that period expired, there was more of a short covering that did see out. So long rolls is what you're seeing. For September, what stood out was the return of the large cap names. They came back into play because the large caps outperformed the broader markets, and also the Nifty Bank found its form, and that's going to be a crucial component from here on as well. What are the key factors to track for the October series? Crude oil prices have been subdued. They need to be subdued. Big macro tailwind for us. The second factor is, the large caps. They have been outperforming. Can that continue? I think, you'll be leaning towards that given the kind of underperformance you've seen between large caps in comparison to the broader market. So that's the other one. And the third factor is metals have seen a melt up. And if China is going to come back, this could be the sector to track even from here on. So those are the top 3 points. What does history suggest for the October series? Well, for the Nifty, more often than not, we have ended in the positive. 8 out of the last 10 years, average return of around 1.7%. On the Nifty Bank, it gets even better because the average return that we've seen in the last 10 years is nearly around 3.9%. But let's broaden this data point, and that's come out, from a note from IIFL Alternate Research. They're saying that, the Nifty 200, it's seen more than 10 consecutive months where we have seen gains. That's the winning streak. And in both cases, the index is up close to 38%, which is very encouraging, right? The Nifty 200 moves up. But what happened post that 10 years ago, the next 3 months were followed by some pain. So the bulls will be hoping that history doesn't repeat itself, because in 2014, the next 3 months, the Nifty 200, well, it corrected close to around 16%. So that's just the data point for the October series. What about the FIs and the clients? They're opposite ends of the spectrum. The FIs are even more net long in comparison to what we saw at the start of the last series. The clients, they're even more net short in comparison to what we saw at the start of the last series. On stock futures, though, both of them, they're net long. So they are, in agreement out there that this could be a stock-specific market. For today, the Nifty IT index, well, that's going to be important because Accenture's numbers were quite good. 15% of the total weightage on the Nifty is towards IT stocks. And consulting, they're suggesting, could come back. And consulting is a positive for Indian, IT companies because it could mean that discretionary spends do come back as well. Finally, the levels on the Nifty, it appears we're moving towards the 26,500 odd mark. So that becomes the first resistance zone. On the downside, the 25,800 odd mark, that's going to be the crucial mark as well. Since we're talking about this melt up in China and the stimulus that's happening out there, Vedanta, that could be the buy on dip stocks from here on, because you have the Fed that's cutting rates and you have China that's stimulating the economy as well. So keep an eye out on that one.
All right, Nigel, thanks very much for that. So there is a fair bit to track as we go on. Let's get you some more opinion. This is Mahesh Nandurkar of Jefferies who's weighing in. He says that corporate sentiment at the Jefferies Third India Forum seems strong with private investments rising. He says valuations are a key concern for FPIs, but willingness to explore new ideas from industrial and capex segment was visible. He adds government's tone was a little more welfare focused, even as senior ministers addressed investor concerns. Mahesh says India remains one of the best long-term equity market opportunities, though near-term can be volatile due to unsustainably high domestic flows. All right, well, that's Mahesh with his thoughts coming through. Jeffrey Dennis is with us, independent markets, emerging markets commentator. Jeffrey, great to have you with us here. Thank you for your time. So let's start with China, not India for once. And that old question, is this time different? I'm asking in the context of all the false starts we've had in the last 3 years in China, right? But those false starts have meant 30, 40, 50% rallies, which then eventually got sold off. So nothing to scoff at, but is this time really different with the promise of fiscal push as well, which so far has been absent? Go on.
Yes, I'm not actually very convinced. I think what China really needs is the fiscal push, and we need to see what the details of this fiscal push will be, because as you've already commented in the program, we've seen monetary easing of a whole variety of instruments over several months without having any real impact on the economy. The key in China is the weakness of consumer spending, the low level of consumer confidence, and the inability of the government to be able to switch the sources of growth from investment and exports towards consumer spending. In my humble opinion, to get that going, you've really got to get the property sector back on its feet, and I don't think these measures necessarily do that. And you've got to see the consumer doing well through improved, as I say, confidence and improved spending. And I'm not sure you're going to get that. So I suspect, unfortunately, this may well be another false dawn.
Okay, what is the sense from here on, Jeffrey? Good morning. Now, we have the Fed lowering, and the China stimulus is definitely being noticed by the market. There's a lot of buying going back in the Chinese market, though, of course, the economic numbers still are looking weak. What is the sense? Do you think China finally will emerge out of the slump that it's in? So is the market enthusiasm well placed?
I think the market will probably run for a while, because I think this package of measures, certainly on the monetary side, and various financing supports for mortgages and for buybacks and for equity investment, was a big surprise. It was a big package, obviously, earlier in the week, and obviously there's some hope now that fiscal will add to that, and I think that will provide some support for the Chinese market for a while. I mean, China's up, according to MSCI, well into double digits over the last week. It's been a very impressive move, including today. The question is, do you chase it? Do you chase it hard? And I'm not sure you do chase it very much, for the reasons I've suggested. Now, obviously, the news looks pretty good all around, because the Fed is now underway with a 50 basis point cut. I thought they'd probably only move 25, but I think what we've got now is a very sensible dot plot from the Fed. The first one that's really been quite believable, and that is we're going to get 2 more cuts over the rest of the year, and probably 100 basis points of cuts next year. And given how reasonably solid the US economic data is, GDP revised, or I should say unrevised, but coming in again with another release today at 3%. The economy's okay, the Fed is easing, we're heading towards 2% inflation. So I think the outlook for equities generally globally looks pretty good, but I'm still a little nervous about whether we're actually going to see Chinese growth break out of this 4 to 5% growth range, which is what you need. For that, you need a stronger consumer, and I'm not convinced you're yet going to get that.
Interesting. Hi, Jeff. Morning. Good to see you in. You're not sounding too optimistic about the Chinese market out there, even going by the stimulus that they've announced. You want to wait and watch. What does this mean for India, though? After a while, the Chinese markets have outperformed the Indian markets just in the month of September. Well, if you look at it in the last 4 years, they have been big underperformers. In the near term, though, do you think, give and take everything, 6 months to around a year, will the Chinese market outperform the Indian markets, given the valuations, given the flows that we have seen, outflows from China?
I actually doubt it. I think India will probably outperform. I put a piece out about 36 hours ago, prior to the fiscal announcement, to be fair, where I said, is this time for the big rotation? And I don't think it is, the big rotation from India to China. And I don't think it is, for the reasons I've suggested. My skepticism as to whether this is really going to stimulate the Chinese economy significantly. I still think the fundamentals in India are better in terms of economic growth, for sure. Now, of course, we've always got challenges with valuations, and no doubt India's done very well over a sustained period of time, whereas China's done horribly. And the net of that, of course, is that China's weight's gone from 43% of the MSCI EM in late 2020 to 24% at the end of August. India's gone up from 8 to nearly 20. I think that's going to go a little bit further. If I were putting money on the table on a 1 to 2 year view, I would still, at the margin, prefer India, because the fundamentals are better despite the valuations. I just want to see a bit more evidence in China that you really are going to see the consumer moving, because without the consumer moving, this is all going to do very little for the Chinese economy, and we're going to be stuck somewhere around 4 to 4.5% growth.
No, absolutely. Jeffrey, by the way, did you watch David Tepper last night on CNBC? And we'll play out sound bites in a bit.
No, I actually didn't, but I do know what he said, which is basically, load up on China, I think, after the Fed cut. And so that was a nice call. But and obviously it's had a but I'm
no, but as you say, we'll find out if it's a nice call or not, but it was an emphatic call. Thank you very much, Jeffrey, for joining us. Great speaking with you. And as I said, we'll play out those sound bites in a bit from now. I don't know, guys, if you watched, but Tepper was asked, what would you buy?
Buy
He said-
everything.
He just said, he was quiet and he said everything.
Everything, China.
What do you mean everything? ETF, stocks? I mean, he just
Everything.
went all in. And so that was interesting. And as I said, we'll play some of that out in just a bit from now. We'll take that break, our first on the program. We'll come back and we'll tell you what's lined up here in terms of the show. In just a bit, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. That's coming up. At 8:30, we quickly do a fundamental stock check with Hemang Jani.
And after that, we will review the top stock picks for the day from our technical and F&O experts. At 9:10 a.m., Nimesh will be there with the standout brokerage report of the day. And before the market opens in the CNBC-TV18 stocks board, we will highlight the top stocks in news to focus for the day.
Okay, well, at 9:30, you'll hear from the management of Uno Minda, Sunil Bora, Group CFO. The company will be with us. After that, KFin Technologies will be the company we'll get to, and that'll be an interesting conversation. Lots happening there.
A little later at 9:50, management of Godavari Power and Ispat will join in. And towards the end of the show, in our special segment, It's the Economy, Lata will be in conversation with Shantanu Chakrabarti of BNP Paribas. Welcome back. Well, the cues are quite positive. Most of the Asian markets are up and about, and we're expecting that positivity to rub off on our market as well. The implied open, as you can see, is showing that we'll probably get a 40-point gap up. So what about individual stocks? Well, for that, our team is standing by with the CNBC TV18 list of top stocks to watch. Guys, good morning and happy Friday to all of you. What else but Accenture to kick things off? Hormaz. So what's the read-through for large IT services companies?
It does look to be a happy Friday for a lot of these IT companies indeed after these Accenture results that came out last evening. And there would be some positive rub-off on these stocks as well. Now, the results, well, $16.4 billion of revenue in US dollar terms was up 3%. In constant currency, in local currency terms was up 5%. Now, last quarter, they had given a 1.5 to 2.5% guidance for FY24. They've ended the year with 2%. So, at the midpoint of the guidance range that they have given. Now, for FY25, they're expecting, for the first quarter, they expect revenue growth to be in the 2 to 6% range. For the full year, they expect it to be in a 3 to 6% range. And in that, they are expecting a positive forex impact of 1.5% that would contribute to the revenue growth as well for the quarter and for the year as well. So, on both parameters, they're expecting 1.5% positive impact, and they're expecting to return around $8.5 billion in cash back to investors in terms of buyback. They've also announced a $4 billion buyback as well. Now, during the earnings call, the management gave some positive commentary as well. There's a clear signs of demand that are emerging, that more clients are moving from proof of concept to larger implementation stage, and that is why they're expecting another healthy increase in bookings for the full year as well. Now, as a result of this, the IT stocks listed in the US had a positive impact as well. The Infosys ADR was up almost 2%, as was the Wipro ADR. So, expecting a positive read-through for the IT stocks this morning.
Thanks a lot for that, Hormuz. Well, let's hop across to Nimesh. He's here to tell us about Nuvama Wealth, and he's been telling us there's likely to be a large trade. Nimesh, bang on. Tell us more.
Well, Angelina, so it's official now. Edelweiss is going to sell 6.5% stake in Nuvama via block deal today. The book was launched last evening. The floor price is 5% discount to yesterday's closing price. So, need to see how it's get executed. It's definitely positive for Edelweiss because they unlock the value in Nuvama. Remember, they own close to 13.5% stake, and they're selling 6.5%. So the remaining stake, they allow a 75-day lockup as well. So they can't sell for another 75 days. But it's definitely a value unlocking for Edelweiss. So that would be in green. Execution on Nuvama will be important. If it's happened in the block window, then even Nuvama should react in the green because that would suggest there is a strong demand. But important deal for Edelweiss because it's value unlocking, and they will sell 6.5% stake by block deal today.
All right.
Okay.
Let's just, Nimesh, of course, has been telling us about this, that it will happen. Let's just look at the Edelweiss stock as well, because that has done very well. The money comes into Edelweiss, and, that's a large amount of cash which the company will suddenly have. 135, 136 or so is where it finally left off yesterday. All right, well, the other one which Nimesh has been reporting on is Pratap Snacks. Nimesh, it's happening. Go on.
Well, finally, the deal is announced officially. There was a speculation for a while now that, ultimately the PE investor will exit. So late last night, there was an announcement that Autumn Investment and Madhukela combined will buy out the entire 46% stake from the private equity investor, which is Sequoia Capital, and they will announce an open offer as well. So they're buying the 46% for a little less than 800 rupees per share, but the open offer is at 846 rupees per share, which means a close to 18% discount to yesterday's closing price. But we saw a big surge in the stock price yesterday. Stock was at 20% upper circuit. So I guess the market had a bit of an inclination on this deal coming through, but now it's official that the PE is exiting, and Madhukela and Autumn Investment will buy out the entire PE stake and make an open offer as well.
Oh, yes, absolutely. We noted this yesterday in Closing Bell, and you had flagged it off. So kudos to you, Nimesh. In fact, there was a rub-off maybe of this deal on a lot of the other peer stocks as well. Yesterday, Gopal, Bikaji, all these stocks were flying around, maybe on some sort of sense of what could be happening with Pratap. So, yeah, there's a pretty big move yesterday on these names. We'll watch out for them. Thanks for that. Let's get to Vinny. She's watching out for a couple of stocks as well. Vinny, over to you.
Good morning. Two stocks I'm keeping an eye out on the back of order wins. First one is RailTel. They've received an order from Rural Development Department, that's Mantralaya, for the state of Maharashtra. There's a project that will be happening across Konkan, Pune, as well as Nasik region. The order value is 155 crores. So positive move that one could expect in RailTel. And similarly for RITES, they have also emerged as a L1 bidder. The consortium and a JV that they have, that has emerged as an L1 bidder. This is for the tender of Delhi Metro Rail. The overall value of this is at around 87 crores, while in the JV, RITES has 49%, so their value would be 43 crores approximately. Keeping an eye out on both these stocks, expected to be in the green.
Okay, all right. Thanks a lot, Vinny, for all those stocks and news. Well, let's go across to Sonal. She's here to tell us about a couple of more stocks, BASF and Marksans, I understand. Sonal?
Good morning, Nigel. Talking about BASF and Thangamayil Jewelry, let's start with BASF because they have spoken about portfolio allocation, the Germany parent that is, and they are talking about capital allocation and portfolio steering as well. They will explore overall strategic options for value creation of their coatings business. Now, do remember for the India business, the coatings business will already be transferred to a subsidiary which will be called BASF India Coatings Private Limited by end of 2024. The Germany parent is also considering an IPO of its global agricultural solutions business, and the relevance for the same for the BASF India business is something that the management is still assessing. So this is something that they will update the exchanges with. The other stock is Thangamayil Jewelry because the board has approved a fundraise of around 600 crore rupees via rights issue. Now remember, stock is already at a record high. The market capitalization is at 6,400 crore rupees. The stock is up 21% in last 1 month and up 87% in last 6 months itself. The future triggers, of course, are festive season ahead, gold at record high. So a lot of things working for the stock. But yes, this is the news that has come by in terms of fundraise.
No, absolutely. And, we'll keep an eye out on this one. Vamakshi is now, okay, I think Vamakshi is now joining us with SBI Card, which should be in focus. Vamakshi, hi, morning.
Well, good morning, Prashant. Yes, SBI cards in focus today. The credit card data for the month of August came through, and the share of industry card spending for SBI card rose to almost 15.7% by almost 18 basis points month on month. But this is much below as compared to the last year's level of almost 18%. In August, for the entire industry, credit card monthly spending growth moderated to 13% YOY. This was somewhere around 19% in the month of July. For SBI cards specifically, the spending fell to almost 3% in the month of August as compared to 3.5% that we saw in the month of July. And this in turn reflects continued impact of RBI's notification on corporate card spending. So not such a good update coming in from SBI cards, especially in terms of the spends. Morgan Stanley too has an equal weight call on the company, target price of 745 per share. So overall going with the red for SBI card.
Okay, got it. Vamakshi, thank you very much for that. And now it's over to Vivek for some of the block deal buzz, some of the major ones that we saw yesterday. Vivek?
That's right. So, keep an eye out on two names, Five Star Finance. Remember yesterday, as per the term sheet, close to 20% of equity was expected to change hands, but the actual size, that did go through was a little lower than that. So almost 12 to 13% is what has actually been sold. Who are the selling shareholders? Like we reported, it's the PE investors that have sold. So TPG Asia, Sequoia, two funds have actually paired stake in the company. Who are the buyers? The whole list of buyers, some of the key buyers included Nomura Funds, Max Life Insurance, SBI Life Insurance, as well as a few Morgan Stanley funds. Also keep an eye out for Gulf Oil Lubricants. The promoter, Gulf Oil International, sold close to 4.2% stake in the company at 1,352 rupees a share. Remember, they held close to 72% stake in the company at the end of Q1. Who are the key buyers over here? Again, ITI Mutual Fund, Aditya Birla Sun Life Insurance Company were some of the buyers in yesterday's block deal.
Okay, all right, got it. Vivek, thank you very much for that. And with that, let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are, of course, all the IT names, thanks to Accenture's good read-through. There's Pratap Snacks, Railtel, Rides, BASF, and Thangamel Jewelry. Stocks with negative news flow around them would be Nuvama Wealth, Five Star Finance, and Gulf Oil Lubricants. These three on the back of block trades. And then there is also SBI Card.
All right, well, let's focus on the segment that's been buzzing around. The commodity space has been doing very, very well. That's, the entire space, but ex of crude oil prices. Manisha joins us to help us out with a complete wind down of what went on overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, yes, the crude oil prices fell 2% overnight from a high of $75 in this week. We are holding above 71 right now. Well, Saudi Arabia is dropping oil price targets to hike output, and that's weighed on. And then Libya also is working to restore crude exports. And these couple of factors led to the profit-taking. But it continues to be all-time highs for gold. 2685 is a new all-time high. The Fed fund futures now indicate a 67% probability of a 50 basis point rate cut in the month of November. And the markets, of course, will watch out for the US PCE report in focus today, and that will tell you on how the weekend is. Metals as a sector also continues to buzz. China perhaps will be rolling out more stimulus measures. China is considering 1 trillion yuan capital injection into state banks to boost economic activity, and that news clearly seems to be keeping all metals on a firmer side.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. We're going to come back. Hemang Jani will be with us on the other side. Stay with us. Okay, welcome back. Now, IT services major Accenture reported a strong fourth quarter results for the year, and the company has, of course, also raised its guidance to 3 to 6% for the full year, while also announcing a buyback. We have Manik Taneja now joining us, Executive Director at IT Services and Internet at Axis Capital. Manik, good to have you with us here. Just your first thoughts on implications for IT services companies in India?
Good morning, Prashant. The way I would read Accenture's results and commentary is that there's always a mixed read-through. So Accenture has provided for a formal outlook for the subsequent 12 months, which is about a 3 to 6% growth. But that includes a higher inorganic contribution compared to the prior years. So typically in their guidance, they typically incorporate about 200 to 250 bips kind of an inorganic component. This time around, it's about 300 odd bips. The second bit that I would say is that managed services, which is the real comparable for Indian IT, over there, Accenture's, at least with the way Accenture is guiding, they're not baking in a significant acceleration and growth. And finally, I would say Accenture CEO was very categorical in terms of saying that they are not seeing a lot of improvement, and it's more of the same. With regards to Indian IT, what we've seen is that the markets have been extremely excited about the rate, about what I call as rate of change and macro-led improvement. I think Accenture's guidance is more of continuation of the current backdrop, and thereby some of that excitement needs to come off.
Hi, Manik. Good morning and good to see you. And Manik, the broad read-through that you're getting, post Accenture's numbers as well, and what consensus on the street is factoring in is that green shoots start to occur in the second half of this fiscal, and then we get back to growing ways in FY26. Would you concur, and how would you approach it? You know, it seems that there is higher amount of preference now for tier 1 in comparison to tier 2 companies, because competency is going up. You know, things could get a little bit iffy for the mid-sized companies. Would you be in that camp? Or would you say the mid-sized companies anyway will grow much more, so you'd rather go with them?
So the law of basis essentially favors tier 2 companies, and at least from a valuation or from a stock price action standpoint, it is tier 2 companies which have been outperforming the large caps for a considerable amount of time. Even though when you look at numbers, there is a mixed trend here. So from a growth standpoint, tier 2 companies have been outgrowing the larger ones, but in the near term, they are essentially contending with some pressure on margins, and thereby the earnings growth for tier 2 companies is trailing revenue growth, at least for the foreseeable future. Now, with regards to your point about is there a material acceleration in second half, the way I would say is that even if you look at Accenture's guidance for the quarter gone by, they had guided for about a 2 to 6% growth. They ended up delivering about a 5% YOY local currency growth. And for the subsequent quarter as well, they are talking about an unchanged trajectory, which is once again 2 to 6% year-on-year local currency growth. So at least Accenture's guidance is not talking about a material acceleration in terms of growth trajectory. Within the mix, consulting piece is something which is beginning to get back into the positive territory for them, while managed services, which is where you should probably be focusing on, over there, they are not talking about any significant change in the trajectory.
Okay, so you're saying that there's no need to perhaps run away with joy looking at the read-through from Accenture. Though, of course, incrementally they're making the right sounds and noises, but I get it. It's probably good to temper the enthusiasm a little bit. So, Manik, that brings us back to the drawing board. You know, IT stocks have got a lot of tactical allocation in the last 3 months since the first quarter numbers. Because of a very obvious tactical portfolio churn, there's money that's moved back to IT, which is why the second quarter, I think, performance and the commentary going into the second half becomes extremely important, because earnings need to match the money flow. Do you think that will happen?
So at the very outset, I would say that at least from our channel checks, we are not picking up any significant signs of runaway growth into second half. That being said, there will still be some tactical factors. Think about the way currencies have been moving, especially GBP and Euro, and they will provide some support, some tailwinds to the reported USD revenue growth, and which is what people like us essentially publish, and thereby dollar growth numbers certainly will get upgraded for the sector as a whole. But is there a significant improvement across industry segments? I would say the answer is no.
All right, Manik, good conversation. Thank you very much for that quick perspective on the IT services space on the back of the numbers last night from Accenture. Now, Tata Electronics has signed a deal with Taiwan's Power Chip Semiconductor Manufacturing Corporation, that is PSMC, to set up India's first chip manufacturing plant in Gujarat. PSMC will provide design and construction expertise for the greenfield fab. It will also provide engineering support for the transfer of technologies. The facility will have a production capacity of up to 50,000 wafers per month. My colleague Shilpa caught up with Tata Sons chairman N. Chandrasekaran on the partnership. Listen in.
Fundamentally, semiconductors power everything. Whether you talk about auto industry, whether you talk about power industry, consumer electronics industry, industrial IoT, medical industry, precision medicine, drones, aerospace. I mean, you can think of any industry from agriculture to very advanced new tech industries. Everything is going to be driven by semiconductors. And so it is fundamental for a country like India to have the capability, because once we have the capability, we will be able to custom design our products, our services, and come out with a lot of innovation. There are a huge number of companies which all feed into the foundry. So what this will do is to not only establish a very modern, high-end fab in Dholera, but it will bring a large number of smaller companies, but technically important companies, which will feed into this ecosystem. And this whole thing has moved, I would say, quite fast, and we already have started the groundbreaking, and hopefully in the next couple of years or 2.5 years, we should be up and running.
Okay, all right. Well, let's get some fundamental analysis going then. Hemang Jani joins us on the show. Hi, Hemang. Good morning and good to see you. Well, Hemang, I need to ask you about the metal space, because that's the one that's made a comeback. The fear is that, this time around, it may not play out. That's the fear. But otherwise, metals move with momentum, and momentum is definitely with the bulls. What's your preference in the metals pack? Ferrous or non-ferrous? Aluminium seems to be quite well placed as well, with the rising alumina cost.
Good morning, Nigel. Thanks for having me. So clearly, as a part of the rotation and more so because of the developments in China on the stimulus front, we are seeing a good, comeback when it comes to both ferrous and non-ferrous metals. And we do think that given the global market, the possibility of the rate cut, there is a case for some more upside for the metal space as a whole. Within the pack, what we like purely from a technical perspective is something like Tata Steel, where the iron ore to the finished product spreads are a little better and will be one of the big beneficiary of the current trends. Apart from that, from a location perspective, we have been liking Hindalco. I think that seems to be fundamentally much better placed compared to some of the ferrous stocks per se. And Novelis also, I think, is in a much better position in terms of the funds, the debt part, etc. So these are the two names that we like at this point of time.
No, I've got that and point taken. The other name which saw so much interest, right, was PB Fintech yesterday. And let's just put up the intraday. It'll put the move in context, right? PB Fintech was down 10%. In the early in the morning, and it ended down just under 1700. So there was a big 8% kind of recovery coming through by the close of it. Remember, the news that we broke exclusively day before yesterday evening was their planned sort of entry into the healthcare services space. Markets are worried whether an entry into getting into hospitals will require lots of capital. Hemang, any thoughts on this one? It's done very well this year. And now this, what's your sense?
Prashant, it's a bit surprising given that there's so much of interest for these kind of, startup companies which have started doing so well and you come across these kind of things. And this is not for the first time, some of the retail pharmacy companies, which did so well, eventually went on acquiring some of the, retail pharmacy chains. So typically, when you are sitting on a pile of cash and you really want to create some excitement, you kind of do this kind of thing. But I don't think market is too excited. And even in terms of valuation, you look at the market cap, about 75,000 crore PB Fintech. So not too positive, but we need to see what kind of money they are going to invest. If it's going to be significant, obviously, market would be slightly disappointed with that.
All right, Hemang, final one before we let you go. What about Edelweiss? I'm not sure, but I think you liked that one, Edelweiss. I think we had discussed it in the past. There is that large trade that's going to take place. They're going to be selling, a 5% stake in Nuvama and get close to 1,500 crore rupees, which is more than 10% of its market capitalization. The stock, though, is up more than 20% in 1 month. Your view?
Yeah, so Nigel, we discussed this last time around, and our calculations showed that the intrinsic value for Edelweiss be somewhere in the range of 125, 130, given the sum of parts, including Nuvama and few other companies, and the stock has done so well. So now, if the final block goes to around 6,500 or thereabouts, I think it would be pretty much at the current intrinsic value. So don't see a significant case of upside. I think, post this, you will see the stock, returning back to its broad range of about, let's say, 115, 130 or somewhere there.
Okay, Hemang, we'll leave it there. Thank you very much for that. Appreciate it here on CNBC TV 18. Mitesh and Srikanth will join in on the other side of this quick commercial break. Stay with us.
Welcome back. Here with us on Bazaar Morning Call. So let's talk about the technical setup now. The cues are positive and the implied open is telling us the nice green shade over there that will probably have another 40-point pop as we begin things. Mitesh Thakkar and Srikanth Chauhan are with us. Gentlemen, good morning and happy Friday to both of you. So Mitesh, let's start with you. The market has a lot of momentum around it. Would you be a buyer today at the start?
Good morning. So I think, selective buying is what we've been advocating, given the fact that the indices have had a very good rally in the last few days. I think you got to identifying sectors which are kind of coming out of underperformance mode and getting into some kind of, catching up mode, trying to get back into outperformance mode, and metals was one of them. So I think the overall breadth, the overall directional bias is on the positive side. Hence, I don't think there's any kind of strong worry about the markets, and therefore I think the trade would be on the long side, and you just need to identify which sectors you want to get in and when.
Okay, got it. And Srikanth, what about you? Nifty, Bank Nifty, are you looking at long trades on either one?
Yeah, good morning, Survi. Good morning, Prashant and Nigel. I think these markets are forming a base at important levels, and again, they are rallying towards the next psychological level. So based on yesterday's formation and the way the market managed to sustain above the levels of 26,000 clearly indicates that we are heading for at least 26,500 in the near term. In case if there is any correction because of any reason, we should look for adding positions somewhere close to 26,100 levels. Otherwise, we should look for taking some specific bets in this market, because there are a number of stocks which are crossing their previous highs, or they are into breakout formations. They are finding support at important levels and reversing back. So broadly, I'm of the view that Nifty is heading for 26,500 and Bank Nifty is heading for 55,000 or 55,500.
Hi, good morning, gentlemen. Srikanth, you go first. Tell us what are the stocks on your radar.
Yeah, I would like to go with metal space, because there we are seeing good amount of activity and number of stocks are crossing their previous highs or immediate resistance levels. Hindalco is one of that. It has broken its previous high of 720. In fact, the stock has spent almost 3-4 months below the levels of 720, and now it is crossing that, along with specific positive news flow. Based on it, I'm expecting stock to move towards minimum 760 and maximum 800 in next few days. So it's a buy at current levels with a stop loss close to 724. The other stock which we like is TCS, and the reason is because it has corrected back to its important support levels, and now again it is reversing back. So from here, the stock can move to the levels of maybe 4,400 or 4,500. And finally, from the financial space, IndusInd Bank, there also we are expecting stock to move towards 1,530 or 1,550.
Okay, and what about Mitesh? Your stock calls for the day?
Yeah. So I have buy calls on BPCL. I think one, the crude movement should help, and yesterday there was some reversal on the hourly chart after a good correction. So buy here with the stop at 338. Look for targets of 360. Buy on M&M Finance with a stop at 334. I would look for targets of 353 here. The stock made a fresh swing high. Sale amongst the metal names, and we have had buy calls on NMDC, Hindalco, and Tata Steel earlier. So sale is also something which has caught up yesterday. Buy here with a stop below 136.5 for a first target of 146, and final buy call is on Eicher Motors with a stop at 49.50 or just below it. Buy this one for targets of around 5,100.
All right, we'll leave it there for now, but talk to you soon again. Srikanth and Mitesh, appreciate your time here on CNBC. For now, we'll take a break. We are back. We'll have the pre-open session with us. We'll also be joined by Vishal Manchand of Systematics Group Sources suggest that Alchem Laboratories is in talks to buy Novartis India, from its Swiss parent, Novartis AG. That was an exclusive yesterday. Stay tuned, coming up. Okay, welcome back. I think we're getting the first rates out of the pre-open session, but very, very sort of early, flat, slightly lower, so not really giving us a clean picture of what the start will look like. The big global story, of course, has been China and the stimulus and what may happen. Remember, the big push has come from the fiscal side, and that is what is getting people excited. China bulls are finally crawling out of the woodwork, and one big guy who is very widely followed is the founder of Appaloosa Management. This is David Tepper, and he was on our network channel, CNBC in the US, and he was asked what is he doing in the Chinese market. This is something which is pretty emphatic out there and making headlines. Listen in.
Biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. We didn't talk about the currencies and bond side.
But just with the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things we've seen are that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba, or are you talking
Everything.
JD, Baidu, PDB, the two Chinese ETFs, everything China?
ETF, I would do futures, right? Everything. Listen, a long time ago, in 2010, I think I said everything.
And you would say
I remember when you said everything.
And you know what's good?
You were right.
Everything. Okay. So if they, this is incredible stuff for that place. Okay. So it's everything. Now I would love to see a pullback. Okay, because I will then my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12 is double.
20 to 24%. So
I'm going to say what it is.
Is the limit 25?
I will have another newfound limit, okay, in a pullback, okay, if I see these absolutely be implemented. Because, again, you can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
and wait a second. Yeah. This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash. And that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you
this. Did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? I'm sitting here in a suit. My counter bet is that I don't care.
Okay. He doesn't mince his words, does he? That's a big global view coming in on markets and asset classes around the world. And of course, China being the big focus. Well, with that, let's move on and actually come back to looking at the pre-open rates here. We've actually got an 85-point up move in the pre-open, which is much better than the implied open and what that was indicating. Just very quickly, let's check out the shade in terms of what the pre-open indication is. Hindalco, Tech Mahindra, Wipro, ICICI Bank, some tech, HCL Tech, LTI, Mindtree. So very diverse, very mixed. Pre-open's telling us we'll have a big surge at the open and it would be cutting across sectoral lines. That's the short point. Let's move on now and talk about the standout brokerage report of the morning. We have Nimesh joining in with that. Nimesh, which one are you looking at today?
Hi, morning, sir. So today's standout is on utilities. A big report from Morgan Stanley today morning. They've double upgraded Tata Power to overweight. They've raised the target price on Tata Power to 577. There is a double upgrade on Torrent Power as well. There they've raised the target price to 2268 versus the earlier target price of 1185. So big jump in terms of target price for Torrent Power as well. Morgan Stanley has upgraded BHEL to overweight from equal weight, and they've raised the target price there to 352 versus 220 earlier. However, there is a bit of a notch downgrade on Suzlon after a big rally in the stock to equal weight, but they've raised the target price in Suzlon to 88, and Morgan Stanley has downgraded Power Grid a notch to neutral to equal weight now, and there they've raised the target price to 362. So big upgrade in target prices and multiples as well for all the power utility companies from Morgan Stanley. Coming to specifically to Tata Power now, why on Tata Power a double upgrade? Morgan Stanley says that Tata Power has a good mix of cash cow generated regulated businesses which will have an assured earnings, and there will be a market link businesses as well which are doing very good, like the green platform, the transmission, as well as the pumped hydro. So that's the key trigger for Tata Power to do well. For Torrent Power, Morgan Stanley says that it's a unique company positioned well in terms of current cycle as far as the large merchant capacity is concerned, as well as the renewables, which is doing good, and the growth is picking up in the other businesses as well. And there is a lean balance sheet for Torrent Power. So that's the trigger for Torrent Power. For BHEL, a big upgrade in terms of target price. The reason is coal ordering visibility is strong, competition is benign, and they believe that the large legacy orders will actually get over by first half of 27, and after that the cash flows will improve as well for BHEL. That's the trigger for BHEL. And the last one is Power Grid. As I said, a small downgrade to equal weight, but they've raised the target price. There the big concern is that one, Power Grid is going to see the slowest earnings between FY25 and FY27 across the Morgan Stanley coverage. That's the first reason. Potential competition coming in and return on an execution of the existing businesses can slow a bit, and that can have an impact on the earnings. So a big report on power on the utilities, but a double upgrade on Torrent Power as well as on Tata Power by Morgan Stanley.
Okay, all right. Thanks a lot, Nimesh, for joining in and giving us that neat report. Well, let's focus on the pharma pack then. Alkem Laboratories is reportedly in talks to acquire Novartis India from its Swiss parent. Now, sources say the non-binding bids have been submitted and both companies are engaged in advanced negotiations. The deal could be valued at around 2,000 crore rupees. So that's our exclusive here on CNBC-TV18. Well, let's get in our opinion on this piece if it does come through. Vishal Malchanda, pharma analyst at Systematic Group, joins us on the show. Hi, Vishal. Good morning and good to speak to you after a while. Vishal, a couple of questions here. 2,000 crores, do you think it would be a fair estimate for this particular asset? And if in case Alkem and the Novartis India business come together, could there be some synergy benefits as well that will play out?
Right. So good morning, Nigel. So I think this deal, if I look at the deal from a synergy point of view, there is little scope for synergy, because if you look at Novartis, they have already kind of downsized their business. The last 2-3 years, they have been restructuring their business. Broadly, two parts of the business that Novartis owns. One is a portfolio of transplant drugs that they potentially market through their own sales force. And then they have a portfolio of drugs which they have out-licensed to Dr. Reddy's. And that's basically the mass portfolio that they have out-licensed to Dr. Reddy's. So what happens to the out-licensed portfolio is something that we need to understand post the deal. Can Alkem get back those mass brands? Because that's where the synergy can be created on the revenue side. So that's an important question here. What happens to that? If I look at the Novartis cost structure, if you look at the size of the team at Novartis, it's just about, I think they have 60-65 permanent employees at Novartis. So a lot of downsizing is already done. So not something, we should not expect a lot from the cost point of view, but maybe Alkem can change things from a revenue point of view. They can accelerate growth in the brands that they would acquire.
Okay. So since there is, we don't have clarity on this out-licensed portfolio that you're speaking of, Vishal, then how do we look at, the valuation? The figure that seems to be doing the rounds is around 2,000 crores. So
Right.
What's your view on it? Would it be detrimental if Alkem is to go ahead with this purchase, spend 2,000 crores and not get that out-licensed portfolio?
So what's happening now is what Dr. Reddy is doing is selling that out-licensed portfolio, and Novartis is supplying the out-licensed portfolio to So basically, there's a manufacturing supply that Novartis is doing to Dr. Reddy's. So this is how it is structured. But if I look at it purely from a valuation perspective, if I assume what numbers Novartis is reporting today, at least those would be the numbers that Alkem should get. This is valued at about 33 times EBITDA, 32, 33 times EBITDA, and almost 35 times earnings. So not very stretched, but given the room of synergies, I think not a great deal. So I don't think there are synergies on the cost point of view. Whatever is there, it is whatever is there would be basically the mass brands that Dr. Reddy is marketing. Can Alkem get that back? If those brands can come back to Alkem, probably Alkem can do more out of this deal.
Okay, so one needs to tread with caution and then look at the granular details of this deal as and when it happens. Got that, Vishal? What's your current rating on Alkem, if you have it under coverage, and what's the call?
Sorry, I don't cover Alkem.
Okay, all right. Vishal, we'll leave it there on that note. Thank you very much for joining in and giving us some perspective on what this deal, potential deal between Novartis India and Alkem could mean for Alkem if indeed the valuation of 2,000 crores is how it goes forward. The pre-open has now settled to about a 30-point gain. Good time to bring in our technical experts and get a view on the calls that you can consider today. Mitesh is back with us. Mitesh, so what's the 9-10 call?
Well, I'll go with the buy on Steel Authority for targets of 146.
Okay, got it. Mitesh, just one more stock, a little bit out of the textbook. I don't know if you've seen it or not. Edelweiss Financial, the stock has become literally, a rocket in the last couple of weeks. There's a lot of fundamental news flow as well. On technicals, how does it look? And would you still advise an entry?
So, Edelweiss, has had a very good run-up, and we've seen the stock hit from levels of 60 odd to about 140 in a matter of 8, 9, 10 weeks. The long-term charts are still very positive. And the target which we had at the beginning was the monthly close of 148, 150, which the stock did in May 2018. So around those levels, some profit booking will happen. But from an entry point of view, not the best entry point after 6-7 weeks of relentless rally, and the stock has nearly, gone more than double. So I think wait for a pullback or consolidation or pattern to be formed before you enter afresh.
Okay. Mitesh, you said the 9-10 call is sale, and I know you've been positive on this one. Anything else in metals, considering the tailwinds are right, the headlines are right, China is the flavor? What about the others? Maybe Tata Steel, Vedanta, anything else that's looking good?
So, I actually like the entire pack. We have had buys on Vedanta, NMDC, Tata Steel and all. And I think SAIL is one of the underperformers which is now catching up. So, I think all these stocks will do well. But having seen the rally in Vedanta and even Nalco, I think, and Hindalco, which is on a fresh high, I think the entire package should enjoy good momentum. So it's just that today I've recommended SAIL, but I like all of them.
Got it. All right. Thanks a lot for that, Mitesh. Well, let's tell you about the metal stocks itself. CLSA, they have come out with a note, and they've come out with a note post this Chinese stimulus that was announced a couple of days back. They believe that Indian mills are well placed for demand-driven upcycle. And they've mentioned 3 broad factors: high self-sufficiency, domestic sourcing of raw material, whether it's bauxite, alumina, iron ore, or even thermal coal. They're saying either they're backward integrated or sourcing is not much of a problem, which they believe is positive. And they've also briefly spoken about the supportive domestic demand. They go on to add that demand-driven upcycle is likely to lead higher commodity prices if demand comes back, and higher input costs, which will result in better spreads because of this backward integration or better sourcing of raw material. They've also added that assuming a strong demand-driven upcycle, they have given their preference with Vedanta top preference. Then they're talking about Tata Steel as well as Hindalco, and the upside potential comes up for you on the screen. They prefer aluminium plays as well, but they see near-term support for ferrous names as well. They're flagging upside risk from here on, and they're waiting initial signs of demand uptick before turning constructive. So that's CLSA, pretty positive on the metals pack on the whole.
All right, commodities and metals very much square and center in focus. We've got the market open coming up in just a few seconds or so. As always, we look at indices and we'll dive into individual names, individual stocks, etc. The Nifty is starting about 30 points higher according to the pre-open. And I think you've got the sensex, which is indicating a 60-odd point higher start. First rates should be up on your screen shortly, and we'll pick up from there. So will the large cap move, which finally seems to have started, continue? Which naturally on the other side means that mid and small caps continue to take it a bit easy. 26,200 plus on the Nifty. It's an absolutely flat start. And I think yesterday as well, it was something like that. The Nifty Bank is down about 0.25%. It's a little bit in the red. The sensex is starting, it's blinking red and green, 85,800 plus. And you've got the mid-cap index, which is starting about 0.09%. Let's just look at the IT index. It's there on your screen, and that's a 2% pop on the Nifty IT Services Index. So, I mean, like it has been for the last 10 days or so, up or down, IT index is right out of the gates, one of the big movers. So this morning, it's up 1.8 after those that Accenture rub-off more than anything else, I guess. There's 30 stocks which are down, nearly 30 which are down, and about 20 stocks which are starting higher. And that is the market heat map, the Nifty heat map, and gives you a snapshot view of how markets are opening and stocks are opening. But individual names, Survi.
Okay, let's get to it then. Hindalco among the big movers on the Nifty. There's also Tata Steel, the metal stocks that we were just discussing. So there's some shine continuing over there. And then it's IT all the way. So the read-through from Accenture, for now, the market's taking it with both hands. LTI Mindtree 2% higher, Wipro 2.5%, Infosys 2%. HCL Tech is tracking some gains, TCS as well. So the entire IT pack is right up on top. The problem is banks. Now, SBI has finally decided to move about 0.25%. It's been a non-starter all through this week. But the other bank stocks, they're not quite playing ball. Axis is slightly lower, HDFC Bank is down, and ICICI Bank also losing about 0.25% right now. So while IT is up, banks are not. Let's see some more names on the downside, because the Nifty is failing to really take off in any meaningful manner. L&T is still facing a bit of a drag. Yesterday, there was a negative brokerage note from HSBC that still seems to be weighing on the stock. Power Grid has had a fantastic week, so some profit taking coming through 2% lower. And the other stocks losing some ground include an ONGC, Bharti, Reddy's. And by the way, consumer is weak today. So yeah, along with the frontline banks, Britannia, Lever, these are some of the other stocks. Tata Consumer as well, actually. These are on the lower side. And auto is cooling off after yesterday's top-notch move. Today, auto is starting off on a bit of a more muted note. So Nifty not doing much, very flat timing.
Well, that's right. Sterling and Wilson, that's a stock you should be focusing on. There's a large trade that took place, and Nimesha told us a couple of days back, watch out for it. And now we understand that in all probability, there could be the promoter entity that's a seller. So that's why, in fact, that stock, big volumes, massive ones out there. Reliance Power, well, moves from strength to strength. Very swiftly, the stock has moved from 30 to around 46 rupees. So that's 50% that we've seen in a matter of a month or so. You have Z Media as well. And I think they've spoken about some fundraising plans. And post that, the stock has moved up. And this week, the stock is up, I think, close to around 50% actually. So Z Media has been another big mover. And SPFC, stock has been all over the place. Started the week with a 20% upside. Then, in fact, we did see some profit taking on that name, but it's coming up as one of the top volume movers today. Edelweiss Financial, the reason the stock is up 3% is because of that large trade in Nuvama. They'll be receiving close to around 1,500 crores, which is more than 12% of the current market capitalization. So even after the 20% move that we've seen in the last 1 month, the stock continues to move up. Easy Trip saw a bit of a bounce yesterday, but that one as well has cooled off a little bit today. And Prism Johnson, I recall the stock yesterday was at around 235. It ended the stock at around 210 rupees odd. And today, Prism Johnson is back up to its winning ways. But aluminium stocks, Vedanta, Nalco, doing quite well in today's trading session.
Well, lots happening, isn't it? And, we should actually just run through the IT stocks for a quick bit once again, because I think that is essentially what is helping the market in a major way. The index is up. The IT index is up 2%. So the TCS, Wipro, and the others, HCL Tech Mahindra, these are the names which should come up on your screen. But of course, the mid-caps as well, Coforge, the LTIM, LTTS, and so many others where Emphasis, etc. I think that entire pack perhaps more in a focus this morning. So, yeah, this is going to be first off the block in terms of earnings as well. TCS, of course, will be the first off the block. So that's a big one which will report numbers first up. We'll see if it can sort of do better than last quarter. Remember, for the last couple of quarters, TCS, if you exclude that BSNL order, Otherwise, I mean, ex-BSNL revenues have been flat. So that's the real focus here, not very far away from where we are now in terms of earnings. So that's a bellwether in that sense. Let's just look at PB Fintech as well, if you can quickly take a look at it. And it was down 10 yesterday morning, then recovered 8% from the day's low. It's down another 2% this morning. So that's a bit of a cut, which is coming through at this point in time. So that's PB Fintech with volumes as well. You know, just a quick look at maybe the Nifty Metal Index as well. The big mover, as Nigel was telling us all day yesterday, of course, was Vedanta, I think, at 500 rupees. And that, I think, should come back on. It's up another 2% or so, 510, 511 rupees or so on Vedanta.
You know, Prashant, just want to make one point. On the day the Supreme Court verdict had come, you know, with regard to that retrospective tax, the stock sold off. You know, I recall Vedanta went down to 400 rupees. Tata Steel as well went down, I think, to 135 rupees or thereabouts. All those stocks were down. But when we got the fine print, we understood that, yes, there could be a retrospective hit that will come about, but they've been given more than 10 years to pay that money, which would be a positive in that sense. And from there, actually, you know, you've seen the stocks rise up big time from there. Vedanta, I think, is up close to around 18 to 20% from there on. So we had made that analysis here that, yes, it's a negative, but it's not a knockout punch. And they can come back from here because they're getting the time span to come up with that money as well. And all the stocks, the metal index itself has come up, and all this in a matter of a month itself. I think the index itself is up close to around 15% or thereabouts. That was one piece. And the other piece we had made is there was a lot of pessimism on Chinese steel prices, Chinese steel demand, domestic prices being at a premium in comparison to imports. When you hear so much of pessimism on the ferrous space, I've seen it in the past, in the last 15 years, normally the sector does see a bit of a booster shot. And now things have turned around. People are calling for, you know, basing out of prices, steel prices. They're saying that only 5% of the total Chinese steel mills are making money. So steel prices have to move on from here on. So I think, you know, we have given our viewers a fair bit of an idea in the last 1 month or so on both these parameters, the Supreme Court verdict, as well as on basing out of steel prices.
All right. No, very helpful, Nigel. Thanks for that. The index itself is up 1% now. So I think it's the IT index right on the top of the leaderboard. And then, of course, it's followed by what's happening with the metal space. Prateek Gupta is CEO and co-head Kodak Institutional Equities. He's with us now. Prateek, good morning. Good to have you back on the program. Thanks for your time. Just a quick word on all this excitement around China. And the question is this time different? And more importantly for our viewers here, there are two implications. One is metals, as Nigel was also pointing out. So maybe a bit of a lift for commodities in general if there is more actual real fiscal stimulus in China. And second, of course, is flows. Most flows into India comes from emerging market funds. There's one argument that if China will take away money, it won't come to India. You know, does that really hold water? Because if flows start to come into EMs, it'll come according to different weights, and it'll come to India if it comes to China as well. So just your quick word.
Yeah, good morning, Prashant. I think as you rightly pointed out, when you start seeing China running up, that does have a positive rub-off impact on India as well because of the overall weightage it has in the EM indices. Just to give you some numbers, China in the last 1 week alone has rallied by about 12 to 13%. India has also gone up, but definitely not by the same extent. So India is also seeing a lot of foreign inflows in the last 15, 20 days, but not as much as what China is seeing. And when we speak to global investors around the world, emerging market investors, their unanimous view is China is cheap, India is expensive. Having said that, until recently, they were unwilling to put more capital into China because of concerns about the regulatory uncertainty, weak earnings growth. So it is a cheap stock, a cheap market, but expected to stay cheap. Now, this week, obviously, we've seen the Chinese government put in a lot of stimulus. They've cut the reserve ratios, more lending prospects and so on, recapitalizing banks. All of that is quite positive for the Chinese economy in the short term. But and that's why you're seeing this big run up in China, and India is benefiting from the overall flows into EMs. But I think the bigger picture, longer term picture still remains that most global investors are still wary of China, especially if you have, let's say, someone like a Trump who comes in as the US president, he could impose pretty aggressive tariffs on Chinese exports to the US. So therefore, this is more of a trading rally. Not most global investors don't see it as a sustainable rally in the long term, although in the short term, obviously, there is some money going into China. India is getting its share, but we are still seen as a very expensive market. We're trading at 23 times one-year forward earnings. We're trading at a 90% premium to the MSCI EM index. So in that context, we will get our share of flows, but they'll be a bit muted, not like what China is getting.
Fair point, Prateek, but I guess that hasn't stopped our market from running ahead, right? Because you've got so much of domestic liquidity that continues to power stocks. And that's a month-on-month story. So let's talk about the here and now. The only difference is while the money is coming in, the difference is that now it seems to be coming in different parts of the market. We've seen some rotation into IT. We've seen some money move back to financials. And of course, metals being this tactical trade like you described. In terms of portfolio positioning, have you made any changes in the last month or two? And what would be your key overweights now?
So I think you can look at it from a different perspective as far as the portfolio is concerned. First is we have been advocating for the last few months to reduce weightage in small caps where we thought valuations are getting aggressive. Likewise, in many mid caps as well, and shift to large caps. And that view hasn't changed. Second, we've had the view, for example, some of the sectors in the market were getting overheated, defense, chemicals, some of the PSU stocks, and we've seen a correction over there, but we think it's still not enough. These segments still overvalued. Conversely, some of the underperforming sectors is where we are somewhat positive on. For example, the private banks, the life insurance companies, the telecom companies. And then there are sectors where we still like them. We think the earnings growth prospects are still good. These are no longer cheap, but we think in the absence of alternatives, we would still like the real estate companies, the hotels, the hospital chains, and so on. So we made in terms of recommendations, a bit of a shift, but overall, we're still somewhat staying away from the small mid caps, moving to large caps, and moving away. Still recommending investors to move away from defense and PSUs and go to the banks, life insurance companies, and so on.
Right, no, absolutely. And I think a point taken. By the way, this consensus kind of view, Prateek, that large caps will do, I mean, it's been there for a while, right? I mean, tilt towards large caps. Is that now finally starting? Is it possible that we see actually if foreign flows come, is it possible large caps do very well? I mean, very well in a quick time span, whereas the broader market sort of lags a little bit. I mean, seriously lags a little bit. I'm talking about from here, say, to the end of the year. What's your sense?
Absolutely, Prashant. That, I think, is our view. We think also, if you look at the small mid-cap rally, this is driven mainly by very strong local flows. Local flows are still very strong, but if you look incrementally, most of the mutual fund inflows are now going into large cap schemes or balanced fund schemes. They're becoming a little bit risk averse. They're no longer coming into the small cap or mid cap portfolios as much as they were perhaps, let's say, 6 months ago. And meanwhile, if you look at the foreign flows, they are typically always far more large cap oriented. Typically, when you speak to most of these FIIs across the world, whether they're sovereign funds or hedge funds or long-only funds, they don't really have coverage or earnings models or a very deep understanding of some of these small and mid caps. You'll have some India-dedicated FIIs who have that, but that's a very small part of the overall foreign flow. The other part of the foreign flow is also the index-related passive money. That does come into some small mid caps, which are part of the index. But by and large, bulk of the foreign flow will come into the large caps. Valuations for the large caps are relatively more attractive. Like I said, this is on a relative basis. Nifty's at a 23 times, but the small mid-cap indices are even more expensive. So if you look at the valuations, you look at the price performance, you look at the flow outlook, and you look at the earnings outlook as well. Most of the large caps, they're very well capitalized, strong balance sheets, have underperformed. Valuations are attractive, earnings prospects are good. So we think they should do quite well. As you rightly said, they could quite dramatically outperform the small mid caps in the next 6 to 9 months.
Hi, Pratik. Good morning and good to see you, Win. What about the capital marketplace? There's been a lot of excitement out there, but if the markets go into a phase of consolidation, a bit of a lull, then maybe, you'll see some kind of pressure out here. And mind you, these stocks have gone up double, triple as well. NSE in the unlisted market in the last 1 year is doubled, and people are still wondering whether it gets listed or not. How do you approach this theme? It's played out well, but what would you do?
I think time to be cautious on the capital marketplace. This is not to say that from a very long-term perspective, 3 to 5 year, 10-year perspective, these stocks will not do well. The business outlook is very strong. The potential for further capital market penetration is still, the number of demat accounts, broking accounts, the AUMs of the mutual funds. These can grow quite substantially over the next 5-10 years. So from a 5-year, 10-year view, these stocks still look very good. But from a, let's say, 6-month, 12-month view, it is time to be a bit cautious. These stocks have gone up very much. Valuations are very expensive. There could be some regulatory changes coming, which could impact the earnings of these businesses. You have something perhaps coming from the regulators have already been cautioning, for example, the exuberance and the excessive retail speculation in the options market. So any regulatory action against that would impact many of these companies. And then obviously valuations and the whole capital market cycle. We are in a very buoyant capital market cycle. This can carry on for some more time. But at this time, usually as you get closer to the top, the multiples should contract. We are still trading at very, very aggressive multiples. So short term, somewhat cautious. On a 5-10 year view, I think we're still quite positive.
By the way, Pratik, what is the rate of new initiations at Kotak? Has it picked up over the last couple of months?
Yes, of course, it has. We're now covering more than 300 companies. Partly it's because of a lot of the IPOs that are happening, which we have been leading. But also our analysts are initiating on a lot of interesting companies, which were earlier, we knew these were good companies, but they were just too small for many institutional investors. We cater to institutional investors, and typically our market cap cutoff is at least $1 billion, if not more. And some of these stocks, these companies have become big. These stocks have become much bigger in terms of market cap. So now we can cover them. Our investors find enough liquidity in them. So we are increasing coverage both because of the secondary market sort of opportunities and also because of the IPOs which are coming through. So we're now covering close to, or I think almost 300 stocks, which is probably amongst the largest in India.
And if markets continue to go like this, maybe another 300, not very. I don't know how many. Do you at the top of your mind? Do you know how many $1 billion plus companies we have? Market cap?
I think it would be at least north of 400 now. At least 350, 400, my guess.
400. Okay, got it. And you covered 300. So
yeah.
Got that. Pratik, great conversation. Thank you very much for joining us. Appreciate it as always here on CNBC-TV18. Well, that's the market view, but let's get in our first corporate voice as well. Surabhi.
Absolutely. And the company on our radar right now is Uno Minda. A lot of global OEMs have been cutting their guidance, talking about sluggish demand, particularly in markets like Europe. And of course, China continues to be under a cloud. This includes names like BMW, Volkswagen, a lot of names, brands like Porsche, a lot of them talking about lower revenue and lower guidance as well. So how does this impact the Indian chain, the suppliers and the vendors on the auto ancillary side? So this is what we discuss with Sunil Bora, Group CFO at Uno Minda. Sunil, thank you so much for joining in. And, that's the overarching theme that we want to discuss with you. But I must say that, under all this cloud, I think in India, there's still a lot of enthusiasm because, you believe that the festive season will be up and about. And there's also a mega listing that's underway, right? Hyundai is going to be coming in with this mega $3 billion IPO. So let's start first with the India demand situation, what you're picking up on ground. And I believe you yourself have gotten into a tie-up with Hyundai for speakers. So just tell us about that as well, because that's something that really excites the market.
So, Surabhi, you are right. The Indian market definitely are in a secular long-term bull phase in terms of the demand. We know that the PV segment has finally caught up last year, and now two-wheeler segment also is doing phenomenally well in high teens so far in this year. For PV market, while the last year volumes are around 4.5 million, if we look at long term, our view is that industry will grow to 10 million. It's a matter of time, is anybody's guess. People have different projections. But if we were to go back and see from the industry perspective, almost every customer is currently in an expansion phase, and so are we. So we do feel that with the current penetration in India, which is much lower compared to even other developing nations, there is a huge potential for growth in the industry. And definitely don't want to talk about the capital markets. They are definitely important, but for us, we focus a lot on industry, on our growth, on our
No, fair enough. No, fair, got that. Just on the Hyundai tie-up, because that was the latest announcement, I think just came in yesterday. We're not asking for specific numbers. If you can't share that, that's okay. But at least some contours of what is this agreement? These are speakers for global markets, for India. How big is the opportunity? Some sense?
So we already have a running business for speakers. We had a joint venture with a company called Onkyo from Japan. So they have obviously had trouble and they're under liquidation in Japan. So while we have been running the business for quite some time and we have a lot of technology focus inside in terms of R&D, we definitely saw opportunity in terms of partnering with obviously the global giant and the name what you mentioned. So that obviously builds onto our existing business. It's a little premature to talk about numbers because speakers per se is not a very big market. Even our current business is not very big. But definitely this is more of a strategic partnership, and we do believe that this will actually immediately help on our speaker business to sort of grow up significantly.
And this would be for, Hyundai models and cars only here in India in the local market, or even could the tie-up extend to Hyundai, selling globally as well?
So as of now, the market is definitely India, but we will see if there is an opportunity to export.
Okay, all right. Hi, Mr. Bora. Good morning and good to see you, Ben. A quick word on, I think you get only mid-teens of your revenues from the international market. There have been some guidance cuts. How is demand internationally? Is it a little bit subdued?
So I think we have to see that in 2-3 parts. First, definitely from demand perspective, last 2-3 years have been really very good. And some sort of softening was expected, but this is maybe people are not ready for this kind of immediate softening. So I think it's here with us in front of us, so we have to face it. But from a company perspective, yes, while it does have some small impact in terms of the volume drop, what we have been working was in terms of getting more business for newer models. So what we have been trying to work on is that even if there is some softening in demand or volume, which is not in our hand, and we always say that we are definitely, our growth is linked to the OEM growth. So what we have been working is how do we get more business on more models? So what we are trying to do is we are trying to offset our softening of demand versus new business. So for us, broadly, it won't be a significant impact.
And now we got that. Sunil, hi, good morning. Prashant here. And I remember asking you about the potential US tariffs. At that, I remember the number 3-4% direct exports to US, right? I think you had said
yes.
Then. So yeah, I mean, the bet is that you've got the widest product offering and you'll be able to mitigate any slowdown with by supplying to more and more players, etc. Could you just give us that sense? What is the value add? How much of your products go into the passenger car right now? What is we've spoken about these numbers in the past, but if you can update, and where do you see this going? That number going?
In terms of domestic market or US?
Give us domestic and sort of exports as well.
So we have roughly around 18-20 businesses which we cater to PV segment, which are ranging from all the EV agnostic products, be it seating, lamps, etc., to EV products, which is in addition to 18-20 businesses. From export perspective, since we have some joint ventures where the products, the territory is India. Obviously, we don't want to compete with our partners. So from that perspective, there is a limitation to export, like your airbags or products like filters, etc. But from our perspective, what products we have, we are currently exporting seats, we are exporting switches, we are exporting lamps. So I think these are 3 key segments currently we are exporting from India. Plus, we are working on 2-3 products more to add within next 12 months.
Okay, so, let's talk about the overall projections as well. If you could just once again give us a split between the revenue pie, how much is local and how much is exports, and overall growth, considering the export bit is sort of, slight questions there as you're also pointing out. How will the individual businesses grow? Right now, we're talking about top-line growth.
Yeah. So from domestic versus export perspective, our domestic business is roughly around 85-86% of our total revenues. And export is around 13 to 15%, depends on quarter to quarter how it moves. And when we say export, that export also includes whatever we do last mile assembly or the local manufacturing in the different regions. So it's a mix of both physical export from here and also last line assembly at the global operations. In terms of growth, Survi, you know that we always say that whatever is the industry grows, our endeavor is always to grow 1.5 and above, and we are pretty confident that we'll be able to meet the target. Because from revenue perspective, it's very difficult to give a number given that our destiny is linked to OEM, and I think this is the consistent we have been talking in the past as well.
No, fair enough. So, okay, you will grow 1.5% above industry. What is the industry projection now? Because it's too many moving parts. That's the issue, Sunil. PVs, there's concern about demand being very, very sluggish. CVs, there is no meaningful pickup even now. So therefore, what is the industry growth? And you're saying you'll do at least 1.5% above that.
So while it is, again, as we always say, we don't comment on behalf of our customers. But if we go by facts or the numbers till now, the two-wheeler segment is growing into mid to high teens for last 5 months. And PV also is a mid-single digit number, which is a good number given that last year, 2 years have been a significant growth. And yes, from short-term perspective, there are various beliefs that the demand might be softening, etc. But I think the festival season is coming just off the corner. I think it's just a couple of months away. So we can wait and see how the festive season pans out. But I must say that we always say we are in the business for long term, quarter to quarter, year to year. Yes, things can go up and down, as I was saying a little while back. We are in a long-term growth market. Industry has to grow from 4.5 billion to a 10 million car market. China is at 27 billion. So we are way behind in terms of our penetration. Income levels are rising, aspirations are rising. And that is what we firmly believe, and we are continuously investing in our businesses.
All right, Sunil, we leave it there. Thank you very much. Good speaking with you. Appreciate you joining in here on CNBC TV18. The market, I think, is not doing very much, at least at an index level. And it'll come up on your screen as we take that quick commercial break. On your screen now, 22 points. But we are at the day's high, even with this small change for now. Vivek Mathur of KFin Technologies will join in to talk about their business outlook going forward. Stay tuned. Okay, welcome back. We've got the market, which is up a little bit, but not by very much. KFin Technologies is the company we are speaking with next. The stock has surged over 100% this year, 110 to be precise. JP Morgan, in a recent note, says that the company's overall AUM market share has been growing, but equity market share has seen some weakness. Now, of course, equity is where you make money. To discuss this and more opportunities that the company may be seeing, we have Vivek Mathur, Chief Financial Officer at the company, joining in now. Vivek, good morning. Great to have you with us here. Prashant, this side. Now, let's just talk about the mutual fund business, right? We all know the headlines scream out at us every month, record SIP flows, but stoppage ratio is also quite elevated. That does not get that much of a play. Could you tell us what is the net growth you are seeing in your AAUM? And what are the expectations here for FY25?
Thanks, Prashant, for hosting me today. See, overall industry growth remains buoyant, backed by the retail participation, which is at historic high. So if you see the retail investors, the ticket size itself has gone up by 20% year on year at the end of June quarter as per MFI. So we are also witnessing that a 30% plus growth in the AUM is expected. The SIPs continue to grow every month that you hear about retail participation and the stickiness of the retail customers. So the net inflows is basically a combination of what comes into the market from fresh inflows minus redemptions and also the market growth. So we continue to witness an increase in the the net inflows. So it's a combination of 50-50, which is net inflows and market growth put together, which gives a boost to the overall AUM. And we are witnessing that, this buoyancy continues in terms of retail investors, increased participation, leading to the growth in the overall inflows. We feel that, as a company, we will mirror the growth of the industry. We'll actually outgrow the industry. The equity growth that you talked about for KFintech, it's a cyclical in nature, because some of the AMCs come up with NFOs at some point of time in the whole year at different time of cycles. So it does a catch up over a period of time, but overall we remain buoyant. We do expect that the momentum will continue for FY25.
So you said 30% for KFintech in 25?
30% for KFintech, yes. So if the market grows at let's say 28% or 29%, we will outgrow the market, because we have a large number of AMCs. We have 25 AMCs. So overall growth more driven by the small and mid AMCs, with boost of B30 cities pouring in, the distributors playing an active role, the growth in direct playing an active role, the retail participation going up. We are witnessing growth.
And this is net. This is net of stoppages. Net of stoppages. The adjusted number. Okay.
Yeah. So the 30% will have two bifurcations. 15% will come through the market growth. Another 15% will come from the inflows. But it is basically a combined effect of both.
Mr. Mathur, hi, sir. So I'm just going back to the earlier stated guidance. I think you've maintained that at the top line, there should be 19% CAGR growth going up all the way to FY 2027. And at the bottom line, that CAGR is going to be 24%. Now, looking at the buoyancy in the market, looking at the way the equity segment is booming, and also I think you're looking at expanding some of your other segments. Is there any reason to believe that you could be exceeding this guidance as well? I mean, 19% perhaps is too conservative?
So if you see, this is the overall growth of the company. Mutual fund BIPS-based revenue is just 64% of our revenue. We are a diversified company. Overall, 70% of mutual fund revenue has two components. 64% comes from BIPS-based revenue and 6% comes from value-added services. Then there is issuer solutions business, where we help companies go for IPO, which is 13% of our revenue. Then there is international and other investor solutions business, which is another 13% of the revenue. So overall growth, while we maintain that there is growth of CAGR of 14 to 15% in domestic mutual fund revenue, which we are seeing buoyancy in terms of market going up. But other businesses will also continue to outgrow this growth, and we believe that on a holistic basis, 18 to 20% growth in top line of KFintech is something which is doable, and that is the guidance that we have been maintaining. There may be quarters where we'll see you'll see a sudden jump because of market growth or because of large number of demat accounts opening up, because of large number of IPOs coming in. But on a steady state, we maintain that there will be 18 to 20% CAGR on the revenue.
Okay, just give us some sense, because on the other segments as well, I mean, what the strategic focus is, and if there's something immediately on the horizon. I think there's also been a lot of talk about you looking at potential acquisitions. So have you identified anything? And again, which segment are you looking at? There's been some chatter about growing in global markets. I'm talking about the other businesses as well, global business services, and there's issuer solutions. So beyond mutual funds, where else is the focus? And if this inorganic growth comes in, then which segment are you targeting actually?
So the focus is in terms of growing international business. What we have done in the mutual fund RTA business in India and RTA business in India, we have successfully replicated in terms of gaining market share, being the only third-party outsourced player in Southeast Asia. But the segment that we are looking at growing is the fund administration segment, where we have launched the platform called Exalt. And we are now looking at, taking this fund administration business to countries like Singapore, Hong Kong. We have already won a client, fifth largest bank in Thailand. There is another client in Canada. We are looking at setting up legal entities in Singapore, Dubai, subject to regulatory approvals. we are also looking at an active acquisition. We have been exploring acquisitions, and we are looking at acquisition which will give us segue into, clients from US, Europe, the Cayman Islands, Luxembourg, Ireland. Most of the funds are being managed out of Singapore or Dubai or London or US. While there are, countries like Cayman Island, Luxembourg, Ireland, which gives tax advantages to the fund managers. So you will see in coming, 18 to 24 months, K-Fintech aspires to become a global player in fund administration. And that is the segment we are looking at in terms of acquisition.
And what's the timeline? Acquisition, is there anything progressing, anything hot?
It will be too early to say that there is something which is going to get materialized very soon, but we are working on a couple of target companies, and you will get to see more information about it in the coming quarters.
Okay, so just extremely quickly, sir, also on REITs, there's been some talk that you're going to start that line of business as well, a solution for the REIT market. What's happening there, and when do we see a launch?
So it's something where, we have been working with the regulator in terms of, we have developed a platform for invite ITs and REITs. And that is something where it's, as RTA and fund administrator and fund accountant, you can manage folios, you can do unit calculations, you can, calculate the NAV, you can manage the folios of multiple holders of the same asset. So it is not something new for us. We have been doing it for long, and whatever the regulatory framework comes up, we are ready to support the regulator. We have been working very actively in terms of even, you would have read about Paras platform that we developed for SEBI. So this is something which, with 1,000 plus IT engineers and Center of Excellence based out of Bhubaneswar, and another one coming up with Vijayawada, we are at the core of innovation, helping companies do their data analytics, and coming up with innovative products. We have launched 31 products in the last 5 years. So, we are trying to change the way the entire ecosystem works to be more agile, to be more innovative. So that's what we are working on.
All right, Mr. Mathur, appreciate you stopping by, giving us all of those details. Wishing you and your team all the best. You look set for good growth in the next few years. We look forward to catching up with you later on in this calendar year itself. Well, time to move on then. Godavari Power and Ispat, that's a stock in focus. They're announced subdivision of shares. They've also, been in focus because of that big Chinese stimulus. To discuss this and more, we have Mr. Abhishek Agarwal, the Executive Director of Godavari Power and Ispat, who joins us on the show. Hi, Abhishek. It's been a while since we spoke. Thanks a lot for speaking to us here on CNBC-TV18. Let's focus first on this Chinese stimulus. And reports are indicating that domestic pellet prices have finally seen some bit of an increase. Could you quantify it? In the last 2-3 weeks, what has been the price increase? And is it driven by stronger demand?
You're absolutely correct. So there was an increase in the fines prices on the OMC auction, which has led to the increase in pellet prices in the last couple of weeks. And at the same time, there has been an upsurge in demand of steel in the domestic market. We have seen the steel prices go up by almost 8% compared to 15 days before. So I think both the reasons are played for pellet prices to go up.
All right, Abhishek, give us a few more details. I'm looking at your average realization in Q1. It was around 10,500 rupees. I think you obviously get a premium because you have a part of your portfolio that is more high-grade pellets. Could you tell us what should the average be for Q2 and for the second half of the year? Because now those price increases will come into play. So how do you see pellet prices, sponge iron prices, billet prices play out from here on?
Q2 will be probably, something about 10,000 rupees, maybe 5% down compared to Q1 because the market was subdued. But going forward, as the market has revived and fully the demand stays, we can see an uptick in pellet prices going forward from Q3 onwards.
Okay, and so what should the price range be if you have to go by the current demand on ground? If you could help us out with that. And since we're talking about pellets, what's the situation on ground? Are imports still coming in from China? And also as a percentage of your mix, I think you were indicating that you'll focus more on domestic sales. So most of your pellet sales are domestically sold?
Yeah, so I think from last 6 months, we haven't sold any exports. All our pellets are being sold domestically. So the domestic demand in India is on upsurge, especially in the Chhattisgarh market because of the increase in DRI capacity. So we are happy selling in the domestic market, and we have no intention of exporting at the moment because the pricing in domestic is much better compared to domestic market. International market, sorry.
All right, but what about imports? How is the situation on ground? Are imports a worry for the domestic pellet industry?
No, I don't think so. Any imports happens from China. It's mainly on the finished steel side, which are keeping the prices on the lower side, especially the flat products, coil and other products. Apart from that, I don't think so. Any imports are happening from China at the moment.
Okay, all right. Well, also, now for this year, we'll have to keep an eye out on the volumes. You've already laid out your guidance. So let's solely talk on pellets first. You were talking about production number, I think, of around 2.6, 2.7 million tons. Last year, you sold around 1.6 million tons. So what is the volume guidance for the pellet segment itself? Sales volume guidance, if you could give us that. And by when do you increase your capacity by 2 million tons? When should you see the benefit of that increased capacity?
Okay, so this year, the volume guidance has been a little lower compared to last year because we have taken an annual shutdown in one of our smaller units for almost 45 days. So the volume guidance we have given this year is about 2.4, 2.5 compared to 2.6 last year. And the sales volume should be about 1.5, a lakh lower than the last year because remaining is consumed in-house for my steel production. On the new pellet capacity, the construction is underway. We are very targeting to commission the new plant by Q1 FY25. Sorry, FY26.
Q1 FY26. So on the base of around, on a production number of around 2.5 million tons and a sales number of around 1.5 million tons of pellets, for FY26 onwards, what should the growth number look like for pellets?
Since it's going to be the first of operation, so we can consider 50% production. So from 2.4, 2.5, we can see a 3.5 million production. And from FY27 onwards, we are confident we'll achieve the created capacity. So we can see a production of, say, 4.5, 4.7 million tons from FY27.
All right. And sales would be how much? Because some part of that will be used captively.
See, captive consumption will remain the same, which is about 0.9 million tons. Everything else will go for merchant sales. So the sales volume will be about 3.5 from FY27.
All right. Okay. All right. Abhishek, the reason that the market capitalization is nearly around 15,000 crores is because the street believes that Godavari Power and Ispat, from being a bits and pieces player, just making some pellets, now you're going to have a steel plant and you're talking about a 2 million ton steel plant. So by when does that come up and how are plans shaping up out there? Because that's been the big bet, that finally you become a fixed steel plant. So tell us more.
Two things are underway. One is the mining expansion from 3 million to 6 million. We are very close to getting the final approval from the State Pollution Board. So fully, Q4, FY24, we should get the permission to expand the mines. That is one thing. On the new steel capacity, we are on the last stage of getting the environmental clearance from MOEF. So as we said earlier, by I think end of Q3, early Q4, we will get the approvals from the desired, authorities. And when that is in hand, we will start the groundwork. So hopefully everything goes well. Probably you can see Q4, end of Q4, we can start the groundwork in the 2 million steel plant.
So FY27, you'll have a 2 million ton steel plant. Should we take that?
No, FY27 will be, too early. It takes about, 24 months to 30 months. So you can consider, Q3 FY27 or Q4 FY27.
All right. So for FY28, you'll be a 2 million ton steel plant. Are we getting that correct?
Yeah, 0.5 currently plus addition 2 million. So 2.5 million steel here.
Got it. And also you currently have around 1,000 crores of cash in your books, but your capex plan is quite ambitious. If I'm not mistaken, it's close to around 6,000-7,000 crores odd. So would you be raising some debt or will you do some equity issuance to come up with this money, or are your operating cash flows enough to help you fund this entire expansion?
See, currently at the moment, we don't think so we need to raise any cash, but of course we need to go to banks for, opening of capex LCs for the, foreign suppliers. But apart from that, depending on, as and where the capex needs to be invested, we might raise some money, we might dilute some equity. It depends, how the market is progressing. But we are very open with all the options. But we also make sure the debt equity ratio remains, with a very healthy level, which is below 1 or 0.5.
Abhishek, I wonder how the promoter entity must be feeling, because in 2023, the promoter went and sold some stake, I think, at half the current price. Mr. Mukul Agarwal and Param Capital, they got in, so they'll be quite happy. But for y'all, it could be a bit of an opportunity loss, but maybe you'll want to get in investors. So that's why I'll win that. My question is, though, Will promoter entity look to further dilute their stake from here?
At the moment, we have no intentions. We are very confident once we get the mining approval, there should be a uptick in share prices. That will be the next driver for Godavari share price. So at the moment, we have no intention of diluting any shares.
Okay. And let's talk about a year and now. You have given us the broader time, for the next 3 to 4 years, we know your vision. What about your margins? Give and take everything. What should the margin number look like? You normally do mid-20s percent margins. In the first quarter, it was 30%. But this benefit of higher captive iron ore will flow through in this year. So that's what will give it a bit of a booster shot. For last year, you did around 1,300 crores of EBITDA. For this year, what can the margin EBITDA number look like?
We maintained the same levels as last year because Q2 was, much, I would say, slow compared to Q1. And the mining permission is getting delayed. So probably next year, we have entire 100% captive mining. So I think this year we will maintain the same EBITDA levels of 1,200 to 1,300 crores. And from next year, we can see exponential growth with the mining expansion as well as new pellet capacity. Okay, final question there. Just want to clear this point. The stake that's there in Deccan Gold, that's in the promoter entity, right? Not in the listed entity. No, so whatever stake is there in the Deccan Gold is totally on personal capacity, nothing to do with Godavari Power. All right, Abhishek, we appreciate you joining in and filling us in with all those details. So we'll hold you on this EBITDA number of 12 to 1,300 crores in the near term. By FY28, you'll have a 2.5 million ton steel plant. You believe that your books are not very, very leveraged and you're not looking to sell any more stake. Thanks a lot for joining in and filling us in with an insight into how pellet prices are shaping up as well as how your business is shaping up. For the time being, though, we'll slip into a short break. When you come back, we'll turn our attention to the commodity space with Manisha Gupta.
Welcome back. An eye on the market. But before you look at our screen, you've got to look at the neighborhood because the money is coming to Hong Kong. Remember at the start of the show, we were telling you that the market's up 14% already this month. Now, put on another 3.5%. Look at the move coming through over there. The mainland Chinese market is up about 2%. The Shanghai Composite has rallied about 6%. So today you add another 2% on top of that. And Hong Kong is the one that's really taken, the breath away. Anyway, back for our screen, it's okay. Of course, we pale in comparison compared to that Chinese performance, but it's not bad. I mean, the Nifty is trying to keep its head above water. 33 points up on the index, 26,250 is intact. And the moves on the metals part of the market are really pronounced because of the linkages with, of course, global commodities and China. Let's get back to Mitesh now. Mitesh, so what are the calls now? 10 o'clock?
Yeah. So I have a buy on Tata Technology. That's a stock which is now rallying and participating in the tech up move. So buy here with the stop at about 1100 or just below it and look for a target of around 1160, 1170 to begin with. Though I suspect eventually 1200 plus is what I am looking at over here. And the other call is the Birla Fashions. It's come down a bit from the day's high, so gives you a good risk reward entry again. Keep the stop below 346.5, look for targets of 370.
Okay, all right, got it. Thank you very much, Mitesh, for the details over there. With that, let's move to commodities. We have Manisha joining in with the latest action. Manisha, it's been all about China, really. And then there's crude, of course, which continue to slump on the Saudi news. But you tell us, what's exciting you this morning?
Oh, well, as you said, Surbhi, it is about gold, which has made yet another all-time highs. Metals are surging. China is expected to boost in yet another 1 trillion yuan to the banking system to boost economy. The crude oil prices in the meanwhile have seen a bit of a decline. But I am in Delhi, and this is a sugar and bioenergy conference here, and a lot of deliberations happening. And this is coming in at a time when you have sugar prices in the international markets trading at a 7-month highs at around 23.7. Also, when you look at Arabica coffee, that is trading at a 13-year highs. Brazil is dealing with the worst drought ever, and that has led to damage in crops, which has been supportive. The other thing is that the International Sugar Organization says that that the deficit in sugar in the global markets this time around is going to be more severe than what you saw in the previous year. So previous year was 200,000 tons. This time around is 3.5 million tons. That has been supportive. And, you know, a lot of ministers here in the conference also are talking. Yesterday was Mr. Prahlad Joshi who said that the ethanol pricing revision for the Indian industry will happen in the next 4 to 6 weeks. This is what has led to the sugar stocks also doing quite well. The other couple of things that the industry has been asking about is the minimum sugar price hike. And the other thing also is about exports. This is something that the minister actually deviated away from, that this is something that they are talking about. But interestingly, in minutes from now, we will also be listening to Minister Puri and what he has to say about ethanol. Remember, ethanol pricing is something that hasn't been announced for this season, and that is what the street is anticipating. B-heavy molasses actually hasn't been done for last couple of years. So once that also happens, you will see that reaction coming into the markets as well. Well, at this point in time, we have seen the sugar prices gain up by nearly 5% for the month of September itself. So that's one commodity to keep an eye on.
Yes, policy action has been favorable on the sugar side. And like you're saying that, move on ethanol, the pricing, that's going to be critical as well. So lots of action. Manisha, thanks for joining in. Though I know you have a very busy day at that event today. Thank you for being with us. We'll quickly take a break. Actually, before a break, we'll go back and look at IT stocks because they have had a fairly good morning thanks to the numbers that came out from Accenture and the guidance that Accenture put out as well. Hormaz is joining in to track the action for us. Hormaz, take it away.
We spoke about it early in the morning, right, that it may be a happy Friday for IT stocks. It's just turning out to be just that. And while they have cooled off slightly from the highs of the day, they're still doing fairly well for themselves. And that is on the back of Accenture's results and its guidance. Now, when it comes to results for the fourth quarter, Accenture reported $16.5 billion in revenue. In US dollar terms, that was a growth of 3%. In local currency, that was up 5%. So good growth coming in there. When it comes to their guidance, in the last quarter, they had upped their guidance for FY24 to 1.5% to 2.5%, and that they've come into the mid-range of that as a 2% revenue growth that they've seen in FY24. Now for FY25, what they say is that they're expecting the first quarter growth in FY25 to be between 2 to 6%. For the full year, they see it between 3 to 6%, and for both the first quarter and for the full year, they see a positive forex impact of 1.5% in positive terms on their top line, and they're intending to return cash worth around $8.5 billion to their shareholders. Now, in response to that, of course, the US listed shares of Indian IT companies did well overnight, and in their earnings call as well, the management said that there is clear demand that is emerging and clients are now moving forward from just the proof of concept stage to a larger implementation, which is why they're expecting a even better order book compared to FY24. So as a result of which, the IT stocks are reacting positively among the top gainers on the index as well.
All right, Hormaz, thank you very much for joining in and giving us the latest on the IT move that we are seeing today. We'll take a break on that note. On the other side, our special segment, It's the Economy, coming up. Lata today gets chatting with Santanu Chakrabarti of BNP Paribas to focus on financials. Stay tuned for that.